Good afternoon, everyone. I'm David Talbot, Managing Director and Head of Research here at Red Cloud Securities. We would like to extend our thanks to Oberon for sponsoring this session. Our next presenter is Roger Lemaitre. He's President and CEO of UEX Corporation. UEX has over 150 million pounds of uranium in the Athabasca and Nunavut and remains focused on finding more. So Roger, you're going to have 15 minutes and then we'll have a 5-minute Q&A at the end of the session. Everybody, please hit the button, put your questions in the text box, and we'll get to as many as we can. So take it away, Roger.
Thank you very much, and thanks to Red Cloud for inviting us yet again to a great conference. I hope your conference is going well, and thank you for your time with the company. We're going to talk to you about a unique uranium investment option in the space, which is UEX, and we'll explain why as we move forward here. As normal, we'll be doing forward-looking statements, so please keep that in mind as we work through this presentation. It's amazing the difference that a week makes in the uranium space when things get interesting. You can see here we're trading at, I'll give you a chart here that showed that we were trading at 32 cents and $167 million market cap, or $164 million market cap company. Uranium has been on a little bit of a tire based on the recent events, and we were trading at 41 cents and about a $210 million market cap company today. Our board spans all the experience you'd want for a uranium junior company, where we're sitting in our space, with Graham Thody being here since the inception of the company and being one of the founding directors, through to Peter Natepsky, our more recent addition, who's got the iBanking experience. Chris Hamill, our VP Exploration, has been around for a long career in the Athabasca Basin, and Evelyn, our CFO, similarly in the uranium or in the junior space, with several years with us as well. I don't want to get into market dynamics because, quite frankly, you have David here to lean on. Certainly, a lot has changed over the last couple of years, with nuclear becoming clean and sustainable, and with the European taxonomy ruling made fantastic. We've had a spot uranium trust cleaning up the last scraps of the market. Yet the funny part is, with the fact that the investment that's been moving, still a lot of the world's supply is at a fraction of the cost needed to spur on new production. With uranium supply cash costs of under $35, only the world's 50% lowest cost opportunities actually can make money, and that's not returning capital or even in return on investment. And there hasn't been investment in the space yet. We're seeing over the last little while in terms of new production capacity. And yet the world is growing our pounds here rapidly, our need. What's unique about UEX is we hit 3 sort of key investment opportunity areas for our shareholders. We have visibility on production with 5 projects that are in the pipeline, and they're not going to be 10 million pound a year projects for our share thereof, but it will allow us to be a long-term, through the next couple of cycles, uranium producer, producing a modest amount of uranium over that period of time. As we move forward, we certainly on the bottom end of the portfolio have a tremendously large exploration portfolio, and we've been very patient with it because it costs us next to nothing to hold. They're non-core assets for us in the grand scheme of things, but because of the location and because we've been around for 20 years before the last cycle, they're in along key corridors and exploration areas, and we're just waiting for the right opportunity to partner. Maybe we do explore some of them or monetize some of those assets, but it's about finding partners with some sustainability. And I would argue that until very recently, the market hasn't been rewarding or asking for new uranium junior exploration companies. So it's been a little harder to do. But where we really shine is in the low risk growth through discovery portfolio. Those 6 projects there are exceptionally, and a handful in particular, are exceptionally great exploration opportunities that I hope, as we work through the presentation, you'll see that are trend, in some cases would be key parts of majors portfolios. So we'll start up here in the production visibility angle. Our projects are all in the Athabasca with the exception of 1 in Kigavik. We are minority owners on a handful of these. We own Horseshoe Raven 100%, and it creates an opportunity to see sort of flow towards becoming a producer. And I'd say sort of in this sort of order of opportunity, with the exception of Shea Creek, which I put on the side. I put it on the side because, quite frankly, we still see tremendous growth opportunity at Shea Creek within the footprint of the existing deposits. You'll notice that all these opportunities have either had a PEA studies, feasibility work, or even licensing started on them. So they're not just projects that might be there; they're going to be there in the future. And what it does is give our investors a window into an ownership stake in 6 of the next 10 uranium deposits. If I were to look forward and say, I think 3 of those next, or 6 of those are probably the next tier 1 next gen cycle projects. We own a piece of 3 of those, and similarly 3 of the next 4. And that's a unique space. I can't say there's too many companies in the uranium space that allow you to do that. What I think our greatest value proposition is that low risk exploration growth. And I'll show you some examples from our portfolio, the opportunities that we bring to our shareholders. We believe that for uranium investors, either you look at the cycle last time around when we were the market darlings with the discovery at Shea Creek, or whether you look at next gen in the worst markets possible, or Rough Rider, Hathor through the volatility of the peak of the cycle and Fukushima, that quite frankly, if you make new discoveries, that creates the greatest value for shareholders. I think we have the best portfolio in the Athabasca Basin to let that happen. So those are all focused in the Athabasca Basin from both the east and the west side on the key corridors, whether it's the east side key corridor through West Bear, Rabbit Lake, McLean Lake, whether it's the MacArthur to Cigar corridor, or whether we're out on the west side of the basin. And we have great positions on all of those for our growth story. And so here's an example of what we're doing this year at Christie Lake, where we've upped our exploration this year threefold. We're looking at an opportunity to explore basically the extension of the MacArthur River mine. If you see it in the distance there, that A trend conductor, which is part of the P2 corridor that hosts MacArthur Rivers, every single pound there on the A trend, has never seen a drill hole. We're going to put the first drill hole into it this year. The B trend, similarly, we have multiple strands of that B trend. We've got sniffs of some drilling on that B trend that have sniffs of mineralization in, but the key areas that we're keen on drilling with the resistivity anomaly, called the B trend is resistivity anomaly, untested to date. But probably the one that sort of sinks in and says, wow, this is an interesting portfolio play, is our Yellowacre trend around the Paul Bay, Ken Pen, and Aurora deposits, where we have 1.4 kilometers of mineralized basin intersections that have yet to be followed up into the trend. And you can see that on the long section there. That's every hole on that trend that has penetrated through the fault structure that hosts the mineralization. The red dots show you the ones that are mineralized. They may not be ore grade mineralization, but they're mineralized and need to be followed up for basin hosted deposits like Paul Bay. That's the kind of stuff we're doing in our portfolio. We're actively drilling that right now. When you look at Hidden Bay, explored extensively for classic Cigar Lake style unconformity deposits by the previous operators before UEX took over. You see, we wound up on 2 world-class deposits and literally right at the edge of the mineralization there. We have an Eagle Point target between the Telephone and Sioux Fault zones that we've just identified, but that's not even being worked on this year. We're working up ice of the nickel uranium sands, the boulder trend with uranium and nickel and cobalt in the ground that hasn't never been sourced. We think we've sourced the right direction and we're drilling holes. And last year we found alteration and anomalous reactivity in a previously untested area that we're following up on this year. At Shea Creek, half the mineralization at Shea Creek is in the Kenna deposit in the basement, which is in blue basement mineralization. Reds are classic unconformity mineralization. Our teams identified 10 spots where they've hit the intersecting fault structure, cross-cutting east-west structure that has yet to be followed up on for Kenna-style deposits. We think it's in addition to being a great development project, potentially, there's significant growth potential here. We're working with our friends at Orano to find a way to get exploration rolling on that again. When we look at our portfolio of opportunities, we have 21 other grassroots projects that we had through both direct ownership in us and through our partnership with Denison on JC, which we acquired last year. We think now is the time to be able to we've been holding these projects for a long time. We've certainly been told, hey guys, what are you doing with these projects? Do something with them. And we certainly hear and agree. The problem is about trying to get it for the right value and for the right partner. And for the last decade until just very recently, I would argue that grassroots exploration hasn't been supported by investment community. And so it didn't make a lot of sense to do a deal for the sake of doing the deal, especially when your land sits in the best parts of the Athabasca Basin trends. You have 435,000 hectares of land plus on those key trends. I think the market is just starting to turn now to be able to allow us to find partners that actually want to put their money in the ground and not just form the next new IPO company to become next week's cannabis company or the week after. So when I look at UEX, we have a large portfolio of opportunities. We can flex our strategy appropriately towards one or the other tier in our portfolio when the time is right. We have a large resource base, a high quality resource uranium base. We have production visibility on several development projects that will give us a long-term sustainability when they come to market. We have, with our partners operating the first couple of those projects in the pipeline, we can focus on growth through new discovery through an enviable, low-risk resource and mid-stage exploration project portfolio that would be the envy of even some of the major companies. And we have opportunity not just through for a grassroots portfolio, not only for more discoveries, but also for partnerships and monetization of those assets that will help us get to that new discovery quicker, including those assets like we have in the cobalt space. So when you look at 2022 for us, last year we spent $2.3 million in exploration. We're looking to spend about 8.1-ish this year. We have a very aggressive winter program at Christie Lake and at Hidden Bay, where we're going to drill 15,000 meters. And you can see the amount of money or the short holes at the 40 holes at Hidden Bay on our Vixen uranium sands area targets. We have through our partnership or through our ownership in JCU, we're also having our partners on those joint ventures at Waterfountain and Woolley do additional drilling on grassroots projects. We're going to be looking at monetizing, realizing value from our non-core assets through partnerships and even asset sales on our non-core assets. We have the Wheeler River feasibility study ongoing, and we hope that Dennis will continue to provide updates to the market as that moves along. And we have the cobalt assets that everyone's been saying, hey, what are you doing? When are you going to monetize those? Cobalt prices have come back to where they were in 2017, and yet the cobalt equity investments are limited. There's a need for that primary North American supply, and we continue to look for opportunities, and we're starting to get a lot more inbound interest, but we're not willing to give it away. We've had offers, several offers that were worth less than what we've invested in the ground, which isn't a lot of money. So they're pretty weak offers, but I do believe that more people are interested. We're getting more inbound interest as we speak. So with that, I'm actually going to be on time for you, David, so you can start asking questions.
Yeah, no, sounds good. I'm popping up early here for you. So, no, great. Thank you for the presentation, Roger. So we do have some questions here. You have an extensive project pipeline in Canada. I'd say it's probably bigger than anybody besides Cameco. Now, how do you go about prioritizing projects? You know, you've got everything. You've got large projects, discoveries, nickel, cobalt. You know, how do you choose what you want to work on now?
Well, our team always, well, obviously the production projects as they move forward, we're going to be funding those, but they're not, you know, other than the Wheeler River right now, they're not moving at that pace because we haven't hit that incentivized price yet, but we're getting close. So those will be decisions we'll make when the operators of those projects move forward, and we will be looking at doing more work on our 100% owned Horseshoe Raven project to get that into study phase over the next little while. When we look at the mid-stage and resource level portfolio, it really is not so much project by project, but target by target on those projects. Hidden Bay has a dozen of those kind of targets. Christie Lake, we showed 3 of them right there. I would say that 2 things come to play. One is, what are our best targets? And we always want to be drilling the #1 target in our portfolio, then the #2. And that could change based upon things you learn along the way. Or as you drill a target or test a target and it doesn't pan out the way you want, it of course changes. And we don't care which project it's on. We just care that we're testing our best targets. And our team juggles that portfolio every year. Combine that with our ability to finance it without excessive shareholder dilution. And so you've seen us flex our budgets up and down based upon the availability of capital and conscious of shareholder dilution. So this year, shareholders have been screaming for more work, and rightfully so. You see a much more healthy budget. Last year, when the year started tougher, we had a much smaller budget. So I don't think for us, it's a question of prioritizing. We have a very target-rich, high-quality target-rich portfolio, It's about which ones are the best and which ones can we fund at any given time. And it does fluctuate quite radically.
Right. Okay. So with that in mind, is there any room here for further M&A activity? I guess the idea is not to pick up more projects, but perhaps partner your current projects with others.
Yeah, I think so. I think with a large portfolio of projects, if we're going to bring something into the company, it has to beat the threshold of our mid-stage portfolio, and that's a hard ask. I'm going to be honest with you. But when you look at our grassroots portfolio, it's about finding the right partners that want to move them projects along. And so one of the things that we're asking people who come to us asking for projects is, okay, I want to see you do 2-3 years worth of work. And surprisingly, our group don't want to commit to that, and gratefully so. In previous market before the recent times, that was a hard commitment. But when you look at the way land sits and where we sit our land in the basin, it's really valuable. If it expires, it can't be staked back into the same shapes and sizes based on the new staking process in Saskatchewan. So it's an expiring asset. If we give it away, we're going to give it away to a company who wants to do the work, because we want to see our portfolio continue. We want to be your partner. And so we want to see you want to continue to work those projects. And if you don't, then we're probably not going to talk to you about it. But if you do, then we'd really love to talk to you about it.
Right. Okay. You mentioned incentivizing price a bit earlier. Spot prices just surpassed $50 a pound about an hour and a half ago. Renewed spot buying, obviously, and added Russian risk premiums built into that. So just for your information, that we've got our wind at our back right now, I think, in this sector.
It is moving in the right direction for sure. I'm not sure it's, the number one thing is not just recovering costs, is getting that capital, the cost of capital and investor returns in there. And we're not sure we're quite there, but we're getting close.
Right. Okay. Do you have any synergies between your existing projects and Wheeler River? Now, Wheeler River, you have a 5% interest through the JCU, your share of JCU. But, it is your most advanced project per se, and perhaps closest to cash flow and production.
So in terms of synergies with our exploration projects?
Yeah, with anything else, is there anything that fits?
In terms of with our exploration projects, no, not right now. I do think that one of the interesting things for us when you look at Wheeler River is Millennium, where you're going to have JCU as a partner as well. And I think that there would be some interesting synergies there in the future, but I think that's a long-term discussion with Cameco based on where they're going with Millennium.
Right. Okay.
Now you did mention similar access road for at least part of it. Yeah.
Right. Okay. You also mentioned low risk exploration, and you talked about Hidden Bay, West Bear discoveries, Christie Lake high grade. Are you specifically focused on the eastern side of the basin and specifically targeting basement hosted deposits at this point?
Yes and no. Right now, their best targets that aren't called Shea Creek are in the eastern side of the basin. I think if our partner at Arando was willing to go forward with that, and we're talking with them about how we get that project moving forward in various different, every possible way you can imagine, then our focus would go to the west side for sure. We think that's the best. We think that's the best brownfields or even any exploration play in the basin. So that's what we would like to focus on. But Christie Lake and Hidden Bay are pretty high profile projects, and they'd be flagships in other companies' portfolios. So we're happy to focus on those in the short term.
Right. Okay. Do you see any potential to increase your nickel and cobalt resources before you try to monetize that project? And then when you do, how do you separate your uranium interest, which is essentially inside the same deposit?
We certainly can expand resources there. We've taken a conscious effort this year not to. And for the key reason why is that our investors have been telling us we want to put the money into uranium. And I think they're absolutely right. With our discovery at Michael Lake last year, we haven't put that in the resource category because it hasn't been drilled to the point, enough density to do that. There's still more work to be done. So yes, if we wanted to, we can do that and see that resource monetized differently. I do believe, though, I would like, it's not the right thing for UEX to do right now in terms of drilling cobalt holes. When it comes to separating the space, I'm going to look at West Bear itself. There certainly is a uranium deposit there. It's relatively small. So I don't see, if we break out the West Bear property as we have from Hidden Bay already, that wouldn't just be a cobalt asset. And if there's uranium assets and there's uranium showings there, we'll see how that works out. But I don't think we're giving a lot away at this point in time if we did that. We have two other projects, Key West on the south or west of Key Lake Mine Mill, and on the North Shore at Axis Lake, where we think those are cobalt assets and they would naturally go with West Bear. So yes, I don't think when we're looking at cobalt assets across the rest of our portfolio, that's a different task. I'm not sure we're ready to give that up just yet.